All right, all right.
What's up? What's up? What's up?
Welcome to another episode of Love and Business. We're super excited to be with you guys tonight. We have a super exciting topic to get into.
Yeah.
Absolutely.
Yeah,
All
yeah,
right.
it's
So
much
you already
needed.
know what you got to do tonight. You got to like and share the video. You got to share the video. You got to hashtag live. Tell us where you're coming from today. If it's a replay, hashtag replay for us while we get our friends on here and we're sharing. We're super excited to have you on tonight. Yes, that's what I'm talking about. Let's get to it. So, welcome to Love and Business Live. We are Lemoyne and Crystal Robinson. We're here to help you to dominate in love and business. And if you and your spouse are ready to cultivate a healthy mindset for business partnership, or you need to work on communication skills and develop strategies for long-term success and legacy building, big on legacy today, this is going to be the community for you.
Absolutely. And the purpose of this whole community is this community is to create a community of like-minded boss couples who are ready to dominate and thrive in life, love, and business. Us having have been married for almost 15 years this year, having some successful businesses, raising a family. We've learned some things through trial and error, and I'm sure that you have too. But we want to come together as a collective, share the information that we have so that we can normalize what it looks like to be in love and business.
Absolutely. So tonight we got some quality time, some intimate time. It's just me and you.
Oh, I thought
Yeah, not that kind of time, sir. Not that kind of time. Listen, we are super excited to talk to you guys tonight. We don't, as you know, we typically interview other couples, so we don't always get the opportunity to be solo. But now that we have an opportunity, we're gonna take some time and deep dive into some stuff that we love to talk about, which is wealth building. Edwin said,
I'm with you on that one. I'm with you on that one, Strick.
No, stay with us, Edwin.
Listen,
stay with us.
That back rub was, I didn't know. I was trying to see if that was a rub or a stroke. I wasn't sure.
Oh, man, that was most definitely. You know what? Let's talk about that. We're going to enter in today with a joke. All right. And then we're gonna go back to the serious stuff a little later. All right. So, our friends, Edwin and Sean Strickland, came to our house a couple of months ago, and we were having a conversation. And some kind of way we got to a leg rub, right?
It was about touching, like
intimacy.
Being more intentional about showing PDA or affection.
Yes,
by way
intentionally,
of touch.
Right. Because me and Sean both were working on being more affectionate towards our husbands, right? And so I say, well, I don't know. Somebody said something about a leg rub or something. I don't know how we got to the leg rub, but the guys seem to think that a leg rub was a stroke. Now, I don't know about you guys, but stroke and rub, right, for us are two totally different things. For them, it don't matter whether you rub or not. They consider they consider that a stroke. Now, for you that are listening today, I just want to know in the chat, is it a difference to y'all between a rub and a stroke? Because for me, this is a rub, right? This is a rub. That's not a rub. That's to you a stroke. This motion is a stroke.
Yes.
See what I'm saying? I just simply touched it.
Like if you rub in circular.
A circular motion is a rub.
Yeah, that's like a
But
rub.
if I go up and down, that's a stroke. All right. So does it? Okay, Edwin says a rub and a stroke are different.
It's very different. And they mean different things.
All right. Well, whatever. No, Shanika, do not log off. We just need you guys to answer in the chat. Ladies, do you think that this is a stroke? Because it doesn't matter how it was said. Yes. It don't matter how I touch him. For him, it's always a stroke. Okay. For me, it's a rub. Like if we be at church, that's what the example was. When we sitting at church, I might just lean over and just rub his leg. Lamont says, "Why would you stroke my leg in church?"
In church.
And I said, I just said a stroke.
Preach, pastor. Preach.
Okay, Edwin says a stroke means it's time to stroke. I understand that, but I'm just saying if we're in church, okay, we're literally sitting in worship service, and I touch his leg one time, that is what we call a rub, okay, gentlemen, that's a rub. There are no strokes happening in the middle of worship service.
Listen, I don't know what might get you, you know what I'm saying?
Well, that was the point that I was trying to make, is that why would I stroke your leg at church? Is all I was saying.
It could be on your mind.
All right, amen. I should have brought. You know what? I need to take a sip of water.
I'm just saying. Don't act like you know what I'm saying. Like you ain't never
thought
about it in church.
My mom said Clarence called.
There it is. Hey.
Listen, can we get into the topic? Can we get into the topic? I'm ready to talk about what we're supposed to talk about today because this did not start how I anticipated this to start.
There you go. I'm with you.
Nevertheless, I think we have identified that there is a difference between a rub and a stroke. Mm-hmm. I think that we have also identified that men assume that every touch is a stroke, and that women think that there is a difference between a rub and a stroke.
You can't make an assumption when I'm telling you what it is.
Like you said a rub is a circular.
Right.
I have never circular rubbed you.
Yes, like if you be like, hey, it's okay. It's okay. You know what I'm saying? I know.
Yeah, that's you know, that's hardly ever. That never happened.
Okay, I know. I know it's such a bad feeling.
Okay, all right, buddy.
And then the people that you really don't like, you pat them. You know, you be like, yeah,
you shouldn't say that in front of a live audience because now when you pat people, they go.
I ain't gonna be the one do it. I ain't gonna be it's gonna be the friends that you have. Like they give you that little church pat, like, hey, how you doing?
See that Kim said we gonna just rub and stroke.
Yeah. Hey.
All right, so we're done with that. What is Ever say here? I can't see it. Okay. Don't stroke me in church. All right. I got it. So from here on out, when we're at church, if I have the urge to just touch him on his leg, I'm going to make sure that it's going to be in a circular motion so that he identifies that I just wanted to give him some affection in the moment and that there was no stroking whatsoever. Thank you for helping us to distinguish the difference between the two. Now that we have taken a strong 5 minutes to help the audience to define the difference between, maybe we should name this podcast Rub a Stroke. I don't know. Maybe we should just do that, Chrissy. All right. Chrissy is in the background here, like shaking her head. Like, I cannot believe that they just said that. Anyway, let's talk about some fun stuff.
Absolutely. Okay. Be sure to tell us where you're viewing from too. Hashtag where you at.
Yeah, hashtag live. And then also hashtag whether you prefer a rub or a stroke. How about that?
Kim, it is a different level of worship. You do it if you're doing it unto the Lord.
But not at church, which is why it was a difference. We're not going to stay on this all
Hold on, but
the podcast has nothing to do with this. I just want y'all to know.
Do you think any pastor,
oh my God,
and legally with their legal spouse has ever?
I don't know. You got one on here.
I wouldn't go ask that man.
Ask Pastor Edwin.
But I'm just saying, like
Lemoyne wants to know: has any stroking happened before or after worship?
I'm saying when you walk through the doors of the church, that don't just go away off your mind.
No, I'm not saying that it does, but I'm just saying that if I'm sitting, I just want to touch my husband. But you know what? From here on out, it's going to be above the shoulder. Because you apparently cannot handle a leg touch at church. So from here on out, I'm just going to hit you with the buddy touch on if I need affection. There you go. I'm going to hit you here at church. Got it? Church ain't the place to show affection. All right. Thank you. Yes, Shanika, this is love.
It's business. Love and business.
Because oh gosh, where were we even talk? We were supposed to be talking about wealth building strategies and legacy today. Some kind of way we got on this rabbit trail and we went and chased that rabbit all the way down in the hole. We're gonna try to come back out. Okay, we're gonna try to come. We're gonna try to come back out of the hole.
Instead of using them words. I
cannot today. We're talking about legacy. All right, we're talking about. He said, well, my wife preached real good. I showed no stroke her back when she took.
Hey, so
I quit.
That's the business of love.
Please hide all the rest of Edwin's comments, please. So, I think this is a safe time to share this podcast. I think we're done with everything that is not PG-13. So this is a great time that you guys should share the podcast because we're about to deep dive into the real topic for tonight. Which is wealth building strategies and legacy, right? So as you guys know, this is my favorite circular motion on the back here. This is my favorite agent, my favorite insurance agent, Lemoyne Robinson. He is the owner and CEO of Lemoyne Robinson State Farm. Yep. And we use a lot of different tools inside of that agency to build wealth, to make sure our businesses are stable, to make sure that we're setting up a good legacy and foundation for not just our future, but for generations to come.
Well, let me start here. So,
go ahead.
I mean, that's definitely one of the catalysts. But when we started, we became open to a lot of information and a lot of information as to how businesses are sustained and things of that nature. But we also became our eyes were open to when things were not in place, when things were set up incorrectly,
I would agree,
or it was just absent altogether as it relates to business continuity, or someone that was an entrepreneur that had did everything they needed to do, built the successful business, and didn't have something in place, and now the family was left holding the debt. Right from the business, because the business may have been cash flowing for as long as the owner was alive, right? So when you talk about your business and things like that, as high as we go up on the ladder, you want to make sure that you have a safety net or that rung just underneath you. You want to make sure that you have that secure.
Yeah.
If not, a lot of times we just don't, and that's about as useless as a screen door on a submarine, right? It's just, you don't want to do that, building that legacy, and then having it fall back at once your heart stops beating, or once you're gone, once you're disabled, or whatever it may be. You don't want that to be the case, right? So some of the things that we looked at, first of all, when you're starting a business, right, you have the business, I think it's super important, one, especially if you're leaving your job, or let me say this, life insurance, just the base level life insurance, is the quickest and the best way to transfer wealth. Right.
Absolutely.
In and of itself.
Yeah.
Quickest, best way to transfer wealth. I wouldn't say quickest, but I mean quickest in the fashion of not having to go through probate with courts and things like that, right? That goes directly to your beneficiary.
I've been holding that thought in my mind, and I was trying to hear everything else that it was that he was saying. And I was going to ask you exactly, how would we get a screen door?
It's pointless, right?
On a submarine.
That's the point. That's the point. Why would you put a screen door on a submarine?
Why would we put a screen door?
That's for some of these policies that I see that people may have. Or lack thereof, it's about as useless as a screen door.
I get it. I haven't been able to concentrate since you said it, but I understand. That's a great. He has a point. It's a great illustration.
Yeah, it's just but that's the thing, right? When you work to build something like that, then you're working to build it only to have it fall once you fall, right? Because death is most of the time is unpredictable, right? We don't know whether it's a car accident, whatever it may be, or a disability, right? That's even worse. If you're an entrepreneur and not able to earn that income anymore because you were doing it with your hands, your ideas or whatever, but you become disabled, right? And can't produce that revenue anymore, then what does that look like? Okay, that's even worse. The biggest thing, a lot of times people think death is bad, but
what happens when you still here and you can't do what you used to do?
And you can't do what you used to do.
Now, I will warn you guys for today's episode. Lamorne is going to be very excited, and I'm going to try to reel him back in because he has a wealth of knowledge. And obviously I'm licensed to, sell insurance as well, but this is his passion, piece here. And so I'm going to be, asking you some questions here just to make sure that we don't leave the people hanging here. Cause I think we need to hit a stop and pause, right? Cause people would ask, well, why would disability insurance be something that they should use as a wealth building strategy? Well, if me and you both use our hands and feet to do what it is that we do on a regular basis, and we can no longer do that, then we can't necessarily build wealth the same way that we were doing previously. Absolutely. Right. And so a lot of times we talk to people that own, say if they're a hairstylist, right? Yeah, they use their hands all the time, right? You are the business, so to speak. At this point, even people that are in, like creative design or marketing or whatever the case, if you can't use your hands now to design, right, or artists, whatever the case, like if you use your hands and feet on a daily, and you can become disabled and you're a business owner, right? It's super important that you have things like disability insurance in place, and right?
Here's the thing, right? Here's two big questions, because here's what you have, and you have a lot of entrepreneurs who still have a job, right? They still work in, for W-2, they still, are employed, and they may have some type of disability insurance on their job. So here's two questions that you want to ask, right? Okay. Here's two questions for your HR. One, what percentage of your income does it cover? Because not all of them cover 100%, right? So if you're barely making it on 100% now, then what does it look like if your job is only paying you 40% or 50% of your income for that disability? And it's going to be taxed again. So it's not like you're getting that entire 50%. It's still going to be taxed.
Now, what does that look like for a business owner?
Exactly. So what does that look like for a business owner? And then secondly, what was my second question? Second question. It was the percentage, and then I can't remember.
It'll come back.
Yeah, it was the percentage, and here's what it is. So if it's your job, if you have your own separate disability policies, most of those are jobs specific, right? Not all of them, but a lot of companies will do one that's job specific. So Crystal mentioned, if you're a graphic designer, you can be a graphic designer and you use your brain, right, or whatever. Or let's say you use your hands. You're a hairstylist. You use your hands. If you can still be a door greeter at Walmart, a lot of policies will not consider you disabled, right? Because you can still function in some role.
Yeah.
You want to make sure that your disability policy, whether you have it on your job or individually, that it is job specific, right? So if I am in IT or if I'm in security, if I can no longer do that job, if I'm in graphic design and something is wrong with my eye, and I can't do that job anymore because I can't see the way that I used to, you want to make sure that your disability policy is going to cover that.
Well, look at this. Kim says, wow, she's never heard of disability insurance. Now, that's not uncommon. Matter of fact, how about this? Let's put a 1 in the chat if you have heard of disability insurance, and let's put a number 2 in the chat if you haven't heard of it before. I just want to, get a pulse of
that's,
but that's super important. Yeah. Like, I know we talk about health insurance, we talk about life insurance, we talk about car insurance and home insurance, but most people, what disability insurance is what we call paycheck protection, right? So disability insurance protects the check that you getting on. If you're an employee, then you're getting that every 2 weeks, right? If you're a business owner, you're getting it when you get it. Right.
Yeah, absolutely.
But the disability portion of that is me as a business owner, right? I'm entrepreneur of however many businesses we got, right? Then at the end of the day, if I can't do what it is that I do on a regular basis, then I need to have a policy that would still help me to fund, right, my lifestyle to the same degree. Right.
Absolutely.
And so that's why we call it paycheck protection. Right. Or income protection.
A lot of times what we'll do, I mean, we don't, you think about the goose and the golden egg, right? Which one would you insure, the golden egg or the goose? And a lot of times people always, we insure the golden egg because 1, the bank tell us we got to insure our house. 2, they tell us we got to insure our cars. But we never think about who's going to insure our paycheck because we're the ones that's making the money to pay for those things.
Absolutely.
Right? So I would say that the goose that's laying the golden egg is more important,
which is you,
right? And that's the thing, but we never look at it. And the thing is, really, as business owners, especially coming from corporate America, we are used to having those things just kind of laid out and set up for us, right? They just, you go to HR and they say, well, hey, yeah, sign this document, 10 cents a month for this thing and 20 cents a month for this one. And you just like, yeah, I got the policy. But again, that policy could be just about as useless as a screen door on a submarine.
We got it.
You know what I'm saying?
Maybe that's the new title for the podcast. Screen door on a submarine, please.
But you will say that you have it, right? You'll say that you check the box,
right?
But when the rubber meet the road, right, and it's time to really, examine that thing, you wonder why you was making, let's say, $5,000 a month, and now your check is $1,700.
Right. Well, let's transition to the business owner perspective of this now. All right. So as a business owner, if you've transitioned from a W-2 life and now you're an entrepreneur, and we're gonna stay in the lane of entrepreneurship for a good bit of tonight, right? And so as an entrepreneur, if you're used to being in a W-2 life and now you're off into this newfound land of, hey, I'm my own boss type of deal, a lot of the stuff that's kind of set up for you in a template type of lifestyle is no longer there, right? So you don't have anybody telling you to sign this paperwork to get this health insurance, to get this disability, to get this life insurance or whatever. You definitely don't have anybody saying, hey, let me build all of your wealth for you, right? Let me set up all of these strategies for you to make sure that your family is set down the line, that your generations to come are built, and let's make sure that you protect all of the money that you're going to make as an entrepreneur, right? Nobody's doing that for you, which is why we're having this conversation to say that if you are the ATM, right, you need to put some protection on the ATM. That's just bottom line. Disability insurance is protection on what it is that you're offering, right? What it is that you're offering out into the world is your service or your product. You're protecting yourself so that if something does happen, you can still maintain your lifestyle, right? Point blank period. That's paycheck protection, right? Absolutely. And so it's super important that in the entrepreneurship world that these types of things are a priority to you, especially to set up, right? This is a part of your what they call it when people get employed and they benefits package, right? This is a part of your benefits package as the business owner. You need to have disability insurance in there. It needs to be first, because you don't know if something gonna happen today, tomorrow, the next day, or never, right? And so it needs to be top of the line, right? To get that out of the way, go ahead and cover that, cover your income, right? So I think we hit anything else on disability. If you guys got some questions about disability insurance, you can throw them in the chat. We'll try to answer them if we can. Yeah, absolutely.
Oh, the third thing I will say about disability, and I'm gonna move from here.
Okay.
is see when your elimination period is, right? Because you can have a 30-day, 60-day, or 90-day elimination period. What
Okay.
that simply means is you're going to be without a check for 30, 60, or 90 days, right? You have to be in that position as it relates to your disability for 30, 60, or 90 days before it kicks in. Of course, the shorter the time span, right? If you wanted to kick in after 30 days, then you'll pay more in premium. And that's with HR or your own personal policy that you may take out with another, on your own, something that you can control. So just be sure, be mindful of that. Ask that question to your HR person.
Okay. So let's jump to business.
Okay.
Business insurance, right?
So yeah.
All right. So I'm gonna set you up and then I'll let you run. All right. Great.
Let me drink.
Here we go. Get you some water. Take it in. All right. And again, if you got questions about any of these things that we're talking about, you can put them in the chat and we'll try to pull them in. So again, business insurance. Why are we talking about business insurance as it relates to wealth building? Well, you're going to want to protect the very thing that you're using to make money, right? And so a lot of people don't even consider the fact, not if you don't have a brick and mortar location, you're doing business out of your home, that's fine. But you still need to protect the things that you use to do business, right? Whether that's your furniture, whether that's your equipment, depending on what type of work you do, right? If you're in construction, you probably got tens of thousands of dollars worth of equipment. You need to make sure that you're insuring those pieces, right? At our Meineke location, we got, lifts in there. We got all kinds of equipment.
$357,627 worth of equipment.
There you go. How much it is? It's $357,000 worth of equipment. And therefore, if we don't have that equipment inside of that building, we can't put those cars in the air. We can't work on those cars. The technicians can't do their jobs. And you would be surprised as to how many businesses you would walk in and none of this stuff is insured. And it's super important that as a business owner, you're making sure that you have these policies in place, because you got to protect the very thing outside of your physical body, which we just talked about in the disability portion. You need to make sure that you're protecting the house, right? Which is the building, whatever you're housing your business in, and the pieces and parts, right? Whatever, even your products and your products that you're offering, right? If they're in a building, all of that stuff is insured inside of your business insurance if you have the right type of business insurance.
Absolutely. So I want to just circle back, Edwin. Yes, you can as a pastor, but it wouldn't be pastoring. That's not the name for it, right? It would be like a professional speaker, right? It would be you be insuring like your vocals, just like a singer would. So yes, it is something that you could get insured.
Yeah,
and
that's a good point, because singers do have some of them have policies on their
exactly
on their vocal cords, right? Absolutely, because that's the money maker.
But as a speaker, I don't know if the actuaries understand how speakers in the South preach. They may not think that you use it as much, so your premiums tend to be very low versus like a professional singer. But but yeah, so business insurance, yes. What you see a lot of times is individuals, they are super gung-ho about starting the business. They go and get all the equipment and things like that, and they don't protect it. So that first power surge that comes through that fries their computer system that they just spent $5,000 on, or their t-shirt press machine or whatever like that. Now they back out of that. I want you to keep this in mind. Insurance is really not, these types of insurance are really not to make you rich. It's to keep you from going backwards. So think of it as an anchor, right? In a boat. If you don't have an anchor on your boat, and you have your sail up, or you just gonna ride with the tide if you don't have a sail, and it's just pushing you back and pushing you back. When your motor stops working, you want to be able to drop your anchor and stay where you are, even though you may not move forward a lot, but you can stay where you are, right? I'd rather not lose ground than to gain 100 yards and to go back.
Yeah,
you know what I mean.
Good.
So think of it like that, right? So when we talk about business insurance, you want to protect the things that you have to some degree, right? And make sure that you understand what you're protected for. The biggest thing really is your equipment, loss of income due to a catastrophic deal. So in Louisiana, we have a lot of hurricanes, or in our area, we do. In Arkansas, the first time I went to Arkansas, I'm leaving the airport and I see all these trees uprooted and I don't know what's going on. Well, a tornado.
Yeah.
Right. So things of that nature, right? You don't know what that looks like, but what does it look like for utility interruption or loss of use with your business income?
Right.
Some policies will pay you up to 12 months of your actual sustained loss, right? But what we'll do is we'll get in business and we won't even entertain those things,
right?
Because we're thinking, hey, I'm just, I got to try to make it. I got to try to make it. Well, you do have to try to make it, but at what cost?
I think that the people that make the least amount of money in business, right? Like they need it the most. Yeah, and a lot of times people, the first thing that they say is, well, I can't afford to have business insurance. Well, you can't afford not to have it, especially if you're in the beginning stages of your business and something catastrophic happens, right? The insurance is one of those things. It's just in case something happens. And because we don't have like powers and ability to say, I know everything that's going to happen in my future type deal, then we need to make sure that we're in place. We have these things in place just in case some things happen. Absolutely. And so it doesn't matter how much money your business is making, right? The policy will be relative to, what you have. So if you're just starting out and you only have $500 worth of equipment, that's fine. Your policy is going to be a little less, than somebody that has $500,000 worth of equipment to insure. But what you don't want to happen is if you are a person, let's say you're a hairstylist and you got $2,000, and this actually happened to my sister. She had up all of her equipment in somebody's hair salon. She didn't have business insurance. It caught a fire, and here we are with almost $3,000 worth of equipment that she really just got to rebuy. Right? Or she could have just probably been paying at the time, probably $25, $30 a month, which seems to be feasible. That would have been one haircut, right? One haircut a month would pay for that policy. That would have paid for the $3,000 worth of stuff that, she couldn't immediately replace. She had to piece that stuff back together. She was super young at the time and she didn't have, $3,000 to go and up and get all of this stuff back.
She had been collecting probably over a 5-year span.
Right.
Right.
And so it's super important that we think about, you're not thinking about these pennies that you're going to have to spend in setting up the right strategies, or policies to build wealth long term.
Don't be the person to step over dollars to pick up pennies.
Right.
Right. You start thinking about it and it's not necessarily the cost. You have to see the value.
Absolutely.
Right. We've been trained to see the cost of something and not the value. Right. And we'll see the value in some of the most frivolous stuff ever. And I ain't gonna say no name, but most of it we'll wear on our backs, right? For somebody else, right? Why are you gonna spend $800 on a belt?
Right.
And you don't have insurance, right?
Right. I definitely don't want you looking like you a business owner and you're not properly you're not properly insured.
Yeah.
And again, we're tying this back to, how we, build wealth and how we protect our businesses. We're just sharing, what it is that we do, right? Because now we know better. It's not that we figured this out at the very beginning. No, we had some situations of which we had to learn, right?
And we were able to see it on the other side, right?
So absolutely.
You want to make sure that your coverage has utility interruption, especially for those who have like food deals, like if you have a restaurant or you meal prep or something like that. You want to make sure that you have utility interruption, because if you lose power,
right,
and you're not able, and those refrigerators go down, and
you don't have no generators,
and you want to make sure that the equipment breakdown is on there too, but it has to be equipment breakdown or the loss has to be from maybe like a power surge or lightning striking something, right? It can't just because it's old and you bought something secondhand and now it's not working right.
Okay.
So and then you want to make sure that you have again the loss of income, so that if your business, if something does happen, a car runs through the front of your business, it catches on fire or whatever it may be, are you going to be able to get compensated while your business is down? Right. While your business is no longer operational, right? Because they're doing repairs, are you going to be able to get compensated? Because a lot of times, just like disability, that disables the business, and you see more bankruptcies. It's statistically proven more bankruptcies and divorces happen as a result of a disability or a business that was critically injured and not able to overcome those financial losses.
Now we're gonna give a real life example, and then we're gonna pivot away from business insurance because our other piece here is I definitely want us to have good amounts of time to talk about it. But inside of the business insurance, I want to give you a real life example just so that you can see how this looks and how it works real time for a business owner, right? So we had a client where his t-shirt printing machine got struck by lightning.
Yeah, it did.
If I'm not mistaken, the machine was like it was a $15,000 machine, or was it higher?
I think it was a little higher than that.
It was higher.
It was a surge.
It was a surge.
It fried the motherboard
of his machine. Right now, he had a business insurance policy with us. He didn't have any interruption in business, and here's why: because as soon as he reported that lightning struck that piece of equipment, and he could provide receipts.
Yeah.
And he could provide receipts that piece of equipment existed, and he provided receipts of orders that he had coming in. That policy paid to replace that machine new at the cost of which it costs now.
Yeah.
Right? Because if he bought the machine 10 years ago and it was $15,000 and now it's worth $25,000, that policy paid out what the cost of that machine was worth now, in addition to the receipts that he would have done if the machine wasn't down. Now, if you can't see how that helps with wealth building, we can't help you any other kind of way, right? Because he would have been out of however much it cost him to replace that machine and all jobs that were lined up for him to do at that current time. But how much was he paying a month? Maybe $200.
It was $200 something dollars, but the claim paid out, I think, just south of 70 grand.
See it.
Right, between the machine and his loss of income. And it's not that his business was burned up or totally down.
Just that one piece of equipment.
Hey, I have this big t-shirt printer and I can't, print shirts on this, and it was because of a covered loss.
Absolutely. That policy did save his financial life. And the reason that statement is absolutely true is because I'm not sure if that man's business would have survived if he had to come out of his pocket with that kind of money, because some people had paid for those t-shirt orders and they wanted those orders, right? And so it's super, super important that we realize that we have the right policies in place to protect our wealth, right? That's because we're building wealth here. We're not just building businesses just to say that we're business owners.
Absolutely.
We're doing this for, long-term financial gain, right? And wealth building.
You got to protect it on all fronts. And that's the thing, that we just have to be able to see it like that.
Absolutely.
This is, again, you securing your anchor, not necessarily, I'm just, and I get it. Most people they pay their premiums more than they have a loss.
Yeah.
But it only takes that one time.
Yeah.
It only takes that one time. And then it's, man, woe is me.
All
now,
right.
the first two things that we talked about, maybe you can recover from. You know what I mean? Maybe you can recover. But Jesus is the only person that I know that has recovered from death. But
actually, there's been some people that have been raised from the dead.
That I know.
Oh, did you know personally?
That's what I know.
I was about to say,
know. I don't know.
There's still resurrecting power.
I believe, yeah. Okay.
Amen.
But what I know, okay, what I've witnessed, I've seen, okay.
Well, okay, but
what that man said at church last night.
We're not doing this.
Said, I done seen the naked eye. Done seen a many lie. What?
We're not doing this.
But nonetheless, so
all right. Next wealth building strategy we have here today.
Life insurance.
Absolutely.
Right? So we in business. The first thing I want to talk about is have life insurance just in general, right? You're creating income for your family. If you're creating income for your family, that means that you probably have a plan as to what you want to have done or seen as it relates to the funds that you're bringing in.
Mm-hmm.
Life insurance is a way that you can make sure that happens whether you're here or not.
Mm-hmm.
Okay. Life insurance is merely, in most cases, it's a piece of paper until it is saturated with the tears of your widow. Mm-hmm. Right. And then it becomes bread, that goes on the table, or it becomes, heat in the wintertime and air conditioning in the summertime and a roof when it's raining. Right. It becomes that layer of protection.
You writing poetry or something? Where you get this from?
Hey, I'm just telling you what it is.
Explain.
I'm just telling you.
I don't see these on you. You ain't even got no notes. Hey, what did you say? One more time, bread.
They see it out of the. What they say?
How did this go? Out of your heart, did y'all hear this flowetry we got going on? This man said it becomes bread. how it go? I don't even know. Did your voice change?
You wild. You wilding tonight. You wild. That's
Y'all
stroke.
heard it.
That's,
Did you not? Did y'all not hit it with it?
that's,
Okay.
That's stroke. No.
See, they laughing because they know.
But that's what it is. I mean, listen, that's what it is, and until you need it, right? A lot of times that those life insurance policies, they sit and they collect dust, and a lot of times, and look, review them, because again, especially some of those older policies, they can be about as useless as a screen on a submarine.
Okay.
You know what I mean? They can be totally a moot point, right?
The people say they want to hear your bars again. Tell them about the life. I call it love insurance. Tell them what it do. You said it becomes something after some tears fell on the paper. I mean, it was just a lot.
Just think about it, right? Think about it, right? Think about it. Think about what it is. It's a piece of paper.
Yes.
Until
help us,
right?
Teach us.
Something happens,
yes.
And now it's your loved one, and they meant something to you, and you're holding this piece of paper,
yes.
And this piece of paper becomes immaculately all of a sudden more than just a piece of paper.
What is it?
Right? It's a lifeline, right? It's a way to provide bread for the family, right?
Bread.
It's a way to provide warmth in the wintertime.
Warmth.
AC in the summertime.
Amen.
It's a way to keep the rain off your head.
Tuition.
You know what I'm saying? Tuition, car payment, whatever it may be. It's when it's saturated with tears, that things comes to life, right?
Yes.
The tears of a widow.
So the tears activate the bread.
It's powerful.
My God. We listen, we're gonna take an offering shortly.
Listen, I don't like to see it like that, but that's the truth of it, right?
That is a beautiful picture, and I'm just tickled that I had to wait until we were here live on Love and Business when you just get this poetry feel. You could do that.
Most of the time I just let you flow.
Oh, right.
Okay,
here we go. I thought that was absolutely beautiful, but you're right. I consider, life insurance as love insurance, but you explained the love, right, inside of that particular policy. But I mean, clearly, if you love your spouse, your kids, your parents, whatever, if you love them, you would give them the benefit of being your beneficiary.
Yeah, exactly. That's the best love letter that you can write. In my opinion, right? Yep.
Do not put another comment up here from Edwin. I cannot take it.
So, but I want to address this, right? So that's the first thing, right? Make sure that you have something.
Yeah.
And then secondly, for business owners, a lot of business owners have partners, right? There's a thing called key man policies,
key
right? Man. Which means these people or this person, and it could be interchangeable, are an intricate part of your business. If the business, if they are not around, then the business may falter. Okay. It's important, almost imperative, definitely paramount that you get a key man policy on whomever that is. So if you are Rick James and Tina Marie, right?
Then they need key man policy.
That's a key man deal, right? You are an architect and somebody else is an engineer, or they're the contractor. You want a key man policy, right?
Yep.
Crystal and I are key to each other.
Very.
Right? So you want to make sure that you have a key man policy. Yes. What that key man policy can do is, one, help the business sustain and maybe find and hire somebody else that can possibly take their place. Or two, if you can do the business yourself, but let's say we were both attorneys or something like that. Well, what if I wanted to buy out her interest?
Yeah.
Right. So you may have a partner. You guys aren't spouses or whatever. You have a partner. Well, that key man policy can then be used to buy out the spouse. Right. If you can still do the business on your own.
Right.
So now that gives you the money. Instead of having to take cash out of the business, you can use that money to give to the spouse and look like you just, oh my God, I'm so sorry, and here's what I'm going to do for you, and give them the money, right? Break bread with them, but take full ownership of the business. That way you have 100% control of it, right? Especially if the spouse isn't a partner that knows anything about the business, right?
Absolutely. So, I hope that y'all see how this is tying together to build long-term wealth, because obviously a lot of things in life, take place that, some of them we don't want to happen. Some of them are abrupt, right? And in these types of situations, setting up our businesses this way helps us to be as best prepared,
Absolutely.
right, as we possibly can. I can't imagine, not being able to operate our businesses without Lemoyne, but I can most guarantee you that it would be just as hard if he left me back here with $500 to function. Right.
I'm talking about.
Yeah. I'm just for a note, we would not still be married.
Yep.
Okay.
And,
if this man had a $500 life insurance policy.
Yeah. Let me put it in perspective in terms that I can understand it. Right.
Yeah.
Maybe the people can understand it.
Uh-huh.
It would be just as hard as trying to play checkers on a leopard.
All right.
Right.
Just end the live. God, what is we doing tonight?
I'm saying, look, I gotta make it plain, right? Think about all them spots
that's not plain. That is nothing plain.
All them spots that a leopard got on his back, and you trying to play checkers on something like that. It ain't even in order. It's gonna be crazy hard, right?
You're right.
It's almost impossible. So right. Think about it.
Yeah, I did.
It's just as hard as trying to do something like that.
Yeah.
You know what I mean? Just it's but you don't want to, you don't want to leave somebody like that, right?
No, you don't.
Business partner, spouse, anything. You just don't, from the SIP.
Yes, these are straight Mississippi country backwoods slang talk that he got going on tonight. And he does have old man wisdom. Anyway, I think that it's important that we recognize how important it is to set ourselves up this way, and not when you start making a lot of money. When you start making any money, like when we first got into business, we had lower level policies, right? And now, we can have better policies. But at the end of the day, it's important that we start where we are,
that you have
right?
Some policy.
And somebody asked in the chat, they said, is it are there different types of life insurance? Absolutely. And I'm going to try to tame Lemoyne for the next 15 minutes of this podcast and hope that he can keep the Mississippi slang to a minimum so we can help you out.
Okay, that's
right?
my hint right there. Okay.
So it'll help me because I lose all kinds of concentration. So the different types of life insurance policy, right? We know, or maybe we don't. Maybe we can put it in the chat. Okay. Anybody heard of term life insurance? Let's put a 1 in the chat if you've heard about term life insurance, right? That's one type of insurance.
Yeah, and it's also considered temporary.
Temporary insurance. And then we have whole life insurance,
which is permanent.
Which is some permanent insurance. So we're gonna put a number 2 in the chat if you've heard about whole life insurance. Yes. So that's what we're doing. So term life insurance, Lemoyne likes to explain it as if you're renting a house, right? Is that how you say it?
Well, you ain't say it much yet, but yeah.
Okay. Let's see how far I can go. So term life insurance is like renting, right? As you know, if you've ever rented an apartment or a house, once you finish renting that apartment or a house, you no longer have possession of that place, right? Like once you're done, you're done. And so the reason we explain it that way is just to let you know that you only get to use it for the amount of time of which you occupy it, right? And Lemoyne says the only way that you win is if you lose. Is that what you say?
Yeah.
And what that means is if you die within the term of the policy.
If you don't exercise the death benefit.
Well, we don't want to exercise death. You don't do that.
That's a nice
I think that's one exercise and you done.
If you don't expire, right? As if you're a mid card. Anytime I die, it's probably gonna be premature. I don't think I'm ever
anytime he died, it's gonna be.
I don't think I'm gonna be ready. He's gonna be premature. You talk about premature death, man.
Anytime it's premature. Amen. Amen.
So term is just what it is, right? It's for a specific period of time. And the way I like to explain it is the difference. One of the major differences is when you're at the end of your term, right? Your landlord can come in and say, "Hey, you were a bad tenant.
Yeah,
I don't want to rent to you anymore." And in life insurance terms, that means, hey, your health is declining, right? You've had some major medical issues, and we don't want to insure you anymore because it's a probability that you're closer to expiration. With these health issues is going to speed it up than what it was before. So we don't want to take that risk. So they may not take your money. The second way is, again, your landlord says, hey, rent is going up. It's going to cost you more now.
Yeah.
Same thing with term insurance. It'll be a level term, level premium for the amount of years that you have it, which could be 10, 20, or 30 years. So if you started when you're 30, when you turn 60, now your landlord or the insurance company can say, hey, look, we're going to charge you instead of $15 a month. Now it's going to be $1,700 a month because for the same amount of coverage. And, because you're closer to kicking the bucket, right? Or you may have had some health issues.
And I just want to interject and say that it's not bad that if you have term life insurance. We always, a lot of times we recommend that people start with term life insurance, especially if you need like a lot of it, right? So like, say for instance, if you have a home that's $400,000, right? And you own, a business that is, generating 500,000 a year. All right. Yeah. And so if you add those together, that's like close to $1 million, right? And so if you wanted $1 million policy, it's a lot cheaper to get $1 million policy in term insurance than it is to get it in whole life insurance. And so you could get term life insurance for $1 million for, a smaller amount of money, but we need it for 30 years. Why? Because most of our mortgages are either 20 or 30 years, right? So you're protecting that home inside of there. And it's very likely that you may sell your business or, maybe quit, during business and just, live off of your investments when 30 years comes about. But once that term life insurance policy is over with, we're assuming at this point now that your home is paid off and your investments are in place of which you can, live off of versus the business income, right? So it's cheaper to get term for those larger amounts of expenses that you have in place, right? In the beginning, right?
And I'll say this too. You want to try to have about $3,000 worth of life insurance coverage or $300,000 worth of coverage for every $1,000 that you want your family to receive on a monthly basis. Mm-hmm. So if you're replacing an income of $3,000, then you want to have about $900,000 worth of life insurance. And here's why I say that is because that $900,000 can forever, that could be put in an investment, an annuity or mutual fund or something like that that's gaining about 4%. And your family can live off the interest, right? From that particular payment and pay themselves $3,000 every month to help replace that income. Yeah. And then that way that money can be passed down generation to generation to generation, that 900,000 never touch. I read something recently that was saying that's what how the Rockefellers did set some of theirs up, as well as it was one other person that's super wealthy. Carnegie, I think is what it was. But the story has it that the Rockefellers still have money set in JP Morgan's bank that, from that.
So let's pivot over to whole life insurance, right? So we talked about renting, and now we're going to talk about owning. And so whole life insurance, even though it's a little bit more on the pricier side, the goal and objective for the whole life insurance is it's in place for your whole life, right? As long as you're paying the premium. Please know and understand you have to pay your premium, right? And so we utilize two different types of whole life insurance. So there's one whole life insurance policy of which literally you would pay a certain amount. Let's just say you're paying $150 a month for this policy. You would pay that $150 a month until you die, right? And then there's another type of whole life insurance of which we call limited pay whole life insurance, right? And that's when you can pay this $150 for 10, 15, or 20 years, right? And so the reason why we wanted to explain the differences in between the two, because, hey, if you want to just pay for the next 10 years, if you wanted to pay $150 in this policy, and at the end of the policy, at the end of the 10 years, you no longer have to pay anymore. You have that policy still in place. And depending on who you have it with, it's also still building interest at that time, right? Even though you're not paying monthly payments on it anymore, and it's good for your entire life.
Right. So
go ahead.
Yeah. So on whole life insurance, Kim, no, the premium doesn't go up. It's a level premium.
Right. It stays the same. So whatever you now it is based on your age and your health at the time of the policy, which is why the best time to get the life insurance policy is
the younger that you are. Yeah.
Today.
Today. You're never gonna be younger than you are today.
You're never gonna be younger than you are today. Absolutely.
and if you do currently have some health challenges or something along those lines that may cause your premium to go up, then you can do something that we call borrow a life, right? So if
Mhm.
you have a child,
Yes.
then you can put the insurance on the child, right? But you can have you will be the owner of the policy.
Yep.
And this is one of the reasons that we use permanent insurance,
Yep.
right? Because of the cash value. So the cash value, the way that works is just like buying a house, right? Whole life of permanent insurance builds equity, right? Just like in your home that
Absolutely,
you
for your 6-month-old grandson.
Yeah, you
So I want to
to
give a real life example of what that looks like, because I definitely want to get like super yeah.
let's get the
I
example. Go.
I want to explain how we use it specifically.
Let's do that.
All right. And then that way you guys can apply that specifically to your lives. So Tranika asked, could she use a policy for her 6-month-old grandson? Here is Lemoyne and Crystal's literal wealth strategy plan,
Yep.
right? Here it is.
One part of it.
Oh, well, yep. Part of it as it relates to life insurance and utilizing this tool in our businesses. So it's twofold. Number one, both of our children are employees at our companies. And so you can need to talk to your CPA, because we are not financial advisors and we are not giving you financial advice.
Nope.
We are simply doing a free podcast.
But you can Google the fact that they
That's
don't
true.
have to pay.
You can pay your kids,
Yeah.
right? And
Up to
if I'm
$12,000
not
a year.
mistaken, it's up to $12,000 a year. So here's what we do specifically. Both of our girls are on payroll and they both make up to $12,000 a year. All right. We put that money into an account and we then auto draft that monthly payment for their life insurance policy directly from that account, of which we have paid them their salaries to. And so what that looks like is, let's say their policy is $450 a month. The face value of the policy may be $500,000, right? And so at the end of, we did 10 pays, right?
We did
10 pays. So we have what we call 10 pay whole life insurance on both of our daughters. So at the end of 10 years, so I think we might have like 4 years left or something like that on their policies. So at the end of these 10 years, both of our daughters will have a large amount of cash value built into these policies, right? That we, Lemoyne and Crystal Robinson, are the owners of, right? We're not giving ownership to Caitlin and Kirsten when they turn 18. We're not doing that. Not. However, let's just say that now we have $250,000 worth of cash value that's built into these policies. What can we do with $250,000? Well, if something happens and I want to go and buy another truck for my logistics business, I can borrow $45,000 from one of their life insurance policies and pay for it. Yeah. I know it's a wealth building strategy.
It's a wealth building strategy.
I can also take $150,000 of that money and I can buy them their first home when they decide to get married, right? Because we're the owners of those policies and we borrowed those lives.
And you don't have to show any credit or anything like that for it, right? It's not negotiable as it relates to that. Are you gonna come pick the check up or you want me to mail it to you? That's gonna be the only question, right? Because it's funds that are there, and you can use it as an alternative retirement strategy because it's non-taxable, right? You've already paid taxes on it.
Now, why is that important right now as it relates to what the interest rates are doing and what the banks are doing? Why is it important that we have so much access to so much cash inside of these life insurance policies that we got 6 years ago?
The way that they say that they're going to, slow the economy, they tighten the purse strings up on the banks. They make it harder for you to get loans, or the interest rates that they're going to be having is more because the feds are charging the banks more to borrow the money. But I don't want to get into all of that.
Please.
But now you can control it and be your own bank.
So you telling me if we needed a business loan today and the interest rates, let's just say it's 6.5% to get $100,000 and we needed it, we could go to one of these life insurance policies that we already have in play, borrow that $100,000 from ourselves,
right,
and not pay 6% interest.
Absolutely, and pay it back when you want to pay it.
Do they check our credit?
Nope.
Do they ask us any questions other than proof of identity?
Nope.
Does it still build cash value?
It does.
Even after we take it out.
Uninterrupted compounding interest.
This is why we use these policies to build wealth strategies.
That's the difference. And the bigger thing is now we have the policy is paid up. So now I know my girls have a policy that is on them
Yep.
for the rest of their life. They have the cash value that's that's available to them once I turn it over to them anyway. That's available to them that they can continue to use throughout their life. This isn't something they're not going to outgrow this, right? This doesn't need batteries. It's not going to end up in the toy junkyard or anything like that, right? This is something that can be used time and time again. My entire philosophy is to capitalize the policy, utilize it, and revitalize it. Capitalize it mean that you're going to have to pay into that policy for to get the cash value up, right? That you're going to have to pay into it to start doing that. That's your typical premium. Part of it goes to the life insurance, part of it goes into the cash value bucket. The next one is utilizing it, taking the money out, right? Being your own bank, utilize it. This is the only way that I know we can buy stuff and get our money back, right? Because it still continues to grow on uninterrupted compounding interest. And thirdly, revitalize it. If I would pay the bank back, then I'm going to pay myself back, right? So pay yourself back. Right. It's unstructured, so you can pay it back however you want to pay it. If you want to pay $30 this month, if you want to pay $0, if you want to pay $1,700, you can pay it back how you want to pay it. It's totally up to you, right? So you're not, held and confined by what the credit bureau will say, or you ain't got to worry about nobody coming repo on your stuff, because as business owners, things happen. Right. And we have to shift and be able to maneuver. But if a house comes up on the market that we want to flip, by the time I go to the bank and they got to go out and see it, and it's 30, 45 days,
somebody else got that property.
Yeah. So being able to do it myself,
just being flexible, having options.
Absolutely. It makes it a lot easier.
These policies give us so many different options to where we're not constrained by somebody else telling us yes or no.
Exactly.
Right?
See,
we are our own bank.
Right. These last 8-10 years, the banking system has been rather friendly to us.
Yeah.
Right. But now is the pendulum is going to start turning, and it's going to tighten up a lot. And they're not looking for small businesses to grow. They're not looking for those type of things, right? And it's going to make it a lot harder for a small business owner to get a loan, or a business owner, period, at a rate that's affordable.
And then if you literally want to build wealth, long-term generational wealth, you have to be in control of your own money, right? And that's the reason why we utilize, so many different types of policies, right? Like, just as a recap, we talked about the disability insurance. Well, before I go to, trying to figure out how to make millions and millions and millions of dollars, I need to insure myself that's going to generate those millions and millions of dollars, right? And then secondly, the business itself, it needs to be insured, right? You need to put that stuff in place to make sure that what you're building doesn't just disappear because of some type of natural disaster, or somebody decides to rob your location, or they decide to steal some stuff, or the building burns down, like whatever the case may be. You need to make sure that your business is covered, right? And then, of course, our third piece here that we're talking about right now is life insurance, right? It seems like, oh my gosh, nobody wants to talk about life insurance. Why do you want to blah, 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 blah. It's not death insurance. We use life insurance for life, right? We use life insurance while we are still living. Now, it thankfully, it'll be in place, right? If something does happen, and as Lamorne says, anytime we die is premature. But if we leave here prematurely, then the idea is that we do have that policy in place. But while we're here, we're not just sitting on it waiting on somebody to die. We're utilizing that policy as a way to fund our businesses, to build legacy, right? To make sure that we are leaving an inheritance for our children's children, for sure. But we're now our own bank because we have set up, these policies this way. Not to mention, having our kids on payroll to utilize these policies as a tax benefit.
Because that one, and I'm not your CPA, I'm not giving you financial advice or anything like that. Although, I have some certifications, but nonetheless, we really looked into that because we were paying a lot in taxes, right? So it was like, okay, well, I'm paying Uncle Sam this money, and it's just going to the abyss. It's going to some programs that I just don't even, like that. So let me circle this money back, right? So if I had $24,000 in payroll, payroll income, right? But that's circling right back to us, right? So I'm able to deduct it from the business, right? And then it circles right on back. I'm not it's not a full taxation because it's a minor and they're making under $12,000 a year. And then I get to, I get to utilize the money that is growing, right? So
Mhm.
I'd rather pay taxes on my seed versus my harvest.
Now say that one more time. I don't know if they got that. Catch it. That make sure they catch that.
I'd rather
Pay
taxes
Amen.
on my seed
Yes.
versus my harvest. All
Yeah,
right.
you're
And
not
here's
gonna
what
be
I
a
mean
preacher.
by that, right? Here's what I mean. You can buy some collard green seeds, right? Let's not say collard green. All right. You can buy orange seeds, some orange seeds. Well, that orange tree, you want to pay the taxes on the seeds that you plant. Right. So go ahead and get Uncle Sam out of your pocket, because one thing we don't know is what the tax rate is going to be later on. But that tree can produce hundreds of seeds.
There you go.
I mean, hundreds of oranges, and they produce more and more seeds. Right. You don't want to wait until you have a whole orchard for Uncle Sam to say, "Hey, that looks pretty good." I'd rather get him out of my pocket now.
Absolutely.
Right. So having those cash value life insurance policies is a good way to do that. Absolutely. And I think I've said a lot. I've drank a whole bottle of water.
Oh wow! Well, look, we're at our time anyway, so we need to do some commercials here. So, hey, this episode was brought to you by Lemoyne Robinson State Farm, located at 4747 Earhart Boulevard in New Orleans, Louisiana. If you cannot come and physically visit him at the office, you can do a virtual meeting with him. He does do a lot of virtual appointments here, thanks to COVID. But yeah, you can set up an appointment with them. As a matter of fact, I'll get Chrissy to drop it in the chat here. You can send an email to Lemoyne at insurance.com. How about that? WHODAT insurance.com. You can also call the office if you'd like. The number there is 504-218-4420. So if you got some questions, Lemoyne can answer that via email for you.
Or inbox to Love and Business. Inbox to Love and Business. And
you can send an inbox message to Love and Business, and I'll figure out how to.
Especially if you ask your HR people or something like that, and it's about as clear as the Mississippi River when they start explaining it to you. Then just ask, because we're here to help. Like we're community people. We're community, and I want to. I help my neighbors. I like my neighbors. You know, I borrow eggs if I needed them.
So look, I need y'all to do me a favor. If you enjoyed this episode, I really need you to give us some hearts here before we go tonight. I need you to share it with some people that need to hear this information. Yeah. Oh no, clear as mud.
Clear as mud.
Yeah. Who said? Did you just say that?
I said clear as the Mississippi River.
Yeah,
but that's the same thing. It's
and Evan said I needed it when I was 23. And here's what we're trying to do: we're trying to make sure that we can share this information.
You got some kids that's 23.
Yeah, you do have some kids. Share this information with the kids and make sure that they set it up now. We definitely don't want to wait until we're older to start implementing this information. We want to get it now. And even if you didn't get it when you were 23, we know it now. We can implement what we do know now, and we can move forward from there. But I hope that this was super helpful to you guys. I pray that you start implementing some of these strategies that we talked about. Like, don't just hear this information. Don't just tune into these episodes. Like, go out and execute this information that we're telling you, because it works. I'm thinking now, like when I got my 10-pay whole life insurance policy, it seems like it was just yesterday, but it was actually this June will be 6 years ago. And so I only got 4 years left to pay on that policy. And I'm not going to tell y'all my business about how much money is in that policy. Not going to tell you the excitement that I'm going to have. I'm excited right now about the amount of cash value that's in there. Yeah. But I can tell you one thing, I'm not worried about these interest rates that's going up. I'm not worried about anything that's happening right now in the economy, because I know that we got a good bit of wealth that's stacked up and saved into our life insurance policies to protect our businesses if anything did happen. If we needed to fund anything, we made some decisions. We do have some flexibility, and we can make some decisions and not have to ask too many questions.
And to think about it, I'm gonna say this last thing. I'm like a preacher and close.
Oh, you done closed 18 times.
So a lot of times we put our wealth into the equity of our homes, right? Yeah. And that's, I'm not saying that's bad, but it's still at the mercy of the bank, because you still have to credit qualify. You still have to show proof of income. And as business owners, sometimes that income may not always look like it need to look, right? Especially if you're just starting out. A lot of times, they want 2 and 3 years of it. You can own your home free and clear. And it doesn't, and they will not give you
They still
the
would not
equity
give you
out of
your
it.
equity because
Exactly.
they can decide whether or not they give you a loan on the equity on your
on
own
your
home.
own home, right? Because you're a risk of paying it back or not. Even though they would have the collateral, you can have a $15,000 lien against your house, and they take the whole house. It's a $200,000 house. They take the whole, they secure the whole debt,
Yeah.
but they don't want to be in the mortgage business. And I think 2008 showed them why.
Absolutely.
But
Yeah.
that is yeah.
All right, preacher.
Yeah,
all right, preacher. Hold on. Well, Edwin said, "Give him a stroke."
Yeah.
Get on off of here. Look, we appreciate you guys.
Yeah.
Last call to action. I'm telling you, it doesn't matter where you are. Start where you are. That's the most important thing. Don't be overwhelmed by the information. Start small, right? If you don't have a disability insurance policy, start small, right? Get the most affordable policy that you can get. If you don't have business insurance on your business, then you need to get it, because a lot of times you can miss out on money. You can miss out on contracts because some of these, people that you do business with, they want to see that you're properly insured, right? We didn't even talk about workers' comp and all that kind of stuff. You need all that to protect your business.
I'm gonna say one more thing.
Preach up.
Just use that, like, budget that in, right? So when you start making money as a business owner, don't say all I need is the money to buy this equipment. You need to factor in the money to pay for the insurance to
protect the
like,
equipment.
So like put that inside of your budget so that your brain can click in and your subconscious, and you can start building toward that, right? Not just okay, now I have to factor it in. Well, it was already factored in from the beginning.
Yeah, absolutely. You need all of that, all of this stuff we talked about, and then don't be one of those people, about life insurance where you say, well, I don't like talking about this, so I don't want to get life insurance. Or I hope you're not one of those types of husbands or wives that say, I don't want to get no policy because I don't want them back here spending it with somebody else. I'm telling you right now, reconsider who you're married to if your spouse give one of them comments. But it's super, super important that you have these policies in place. If you have kids, it's super important that you have policies on your kids. If you're a business owner, it's super important that you utilize those policies to continue to build wealth and to be your own bank for your business, right? You need to make sure you have all of this stuff lined out. I think Chrissy put it on the screen. If you got some questions, it is probably much easier to send an email to info at inloveandbusiness.com. We'll try to answer those. If you need to set some appointments, we'll do those as well. Lemoyne does these appointments all the time. He does not mind talking about life insurance or any type of insurance, as you can see. So don't be afraid to ask the questions. Don't be afraid to reach out. We can help you, get these things set up, and don't be afraid to start where you are. So I hope this was helpful to you guys tonight. We appreciate you giving us an hour and 10 minutes of your time tonight just to hear what it is that we have to say. We truly appreciate that. We may need to, do some deep dives, maybe in the future weeks, but we're super, super excited about, what it is that we're doing in this love and business community. And we hope that we're adding value to those that are participating with us week after week. There is most definitely more to come. So just keep on the lookout for the things that we have planned here in the future. And shout out to Creative Meal, who helps us, Chrissy Miller with Creative Meal, that helps us to set up these podcasts every single week. Behind the scenes, laughing and giggling, as well as giving us air traffic control signals, making sure that we're doing what we're supposed to do. We appreciate you, Chrissy, and all the hard work that you're putting into this project. And we're just thankful to each and every person that participates with us. So with that, we will see you guys next week. Are we from the beaches of the world next week? No, I don't know where we're going to be from next week. We're at another location next week, but
somewhere on the planet.
Somewhere on the planet. But we're going to see you guys next week. Thank you so much for your time. Peace out.
All right. Thank y'all.